Hey everyone, this is another episode of Unedited No BS. So this one's gonna be a review of Market Moves by Matt Giannino. It's an Italian last name. 132k subscribers. It's a huge following. Let's see what he has to say.
At the bottom today. I couldn't wait. Today had to be the day we entered some
He is talking much faster than some people. Let's go with the 1.5.
position. I'm going to try to add to it this week, but I want to show you in this video what's in the lead portfolio, what's the plan, how we're going to make money in this market, because once the bottom is over, this is going to be a great 3 to 6 month stretch. And if you're not taking advantage, you're going to be someone who chases at the top again and gets stuck and gets annihilated on the next pullback. So getting it.
So I guess his recommendation, based on what I'm hearing for, is to buy the market bottom. And this is 2 weeks ago. So if you bought, you may have been getting killed the last 2 weeks.
At the bottoms is how you make good money. So let's go over the portfolio. Let's be transparent here. As you can see, Triple Q entered the July calls, and they're at 12% gain. So it's not up a ton. But the point is, this to me looks like the bounce is imminent next week. So couldn't wait. Had to go in half of my.
He was wrong about this, just by the way. The bottom being next week. The bottom is, I don't know if we're in the bottom this week. We still went down a little bit more this week. So current QQQ price $4.92. I think the current QQ price is $4.80, so it went down another $12.
Position. Like I said, I want to get 70K on the Tuesday video into Triple Q calls. I'm going to go half early, and I'll try to get half in next week. In terms of the other positions, SoFi is getting just absolutely annihilated. It's down 45%. We have $14,000.
Current SoFi price $12.57. I don't know what SoFi's price. SoFi stock price. $12.87. It's not bad. Same price. Actually, it's higher than it was 2 weeks ago.
Left in the position. At this point, adding every single month is the goal, and it's not a bad thing that the market has given us discounts. Because if you think about it, if you had to buy the market for the next 6 months, would you want to buy a market that's trending up or a market that's trending down? To me, it's an obvious thing that I would want a market that pulls back for 2 months, because I get to load the boat every single month and buy.
That's only you have the cash to do it. I guess you have a regular job, just constantly buying. Okay, not gonna disagree on this. Just constantly buying when it's going down. Eventually, it'll go back up as long as you believe in what you invest. So far, it's just not too bad. I guess the other guy, Invest with Corey, recommends SoFi too.
In the middle of the month, like I told you. So if I was to add 14 grand into the SoFi position, my loss would be 22%. So
wait, he's paying 140 for March, so I guess he's doing out of the money options.
I'll make more on the upside, I'll have more exposure, and I'll have a big discount for my entry. So it's not a bad thing the market pulled back. You should look at this as an opportunity.
Let's see, what was that? Looks like
back. You should look at this as an opportunity.
So
one of the strongest plays that hasn't even moved a needle is Uber. Uber is one of the best setups in 2025 and 2026. So buying leaps on that every month is going to be huge. We're 17K on the play. So adding next week is probably one of my goals.
okay, so here it is. So he's buying 22, so that's 12, so it's $10 out of the money. He bought 102. Dang, that's over 10,000. I guess if SoFi does get to around 22, around, dang, this guy, it's a bit risky in my opinion. This guy's gotta be a multi-millionaire in order to do certain. This is too risky for us smaller holders. Uber, $100 call. Oh, right now it's five. What is Uber at right now? Uber. 75, so he thinks it's gonna go up to 100, and then he's paying $5.90. Let's go with Uber. Options. This is where I would go to see how how your options might end up going. So you could build an option, go to longs, and go to Uber Technologies. Okay. So he bought all the way to January, and he did $100 calls. Right now it's at 407. He bought it. Oh, he lost money on it. He's losing quite a bit. And if he's buying every month and buying into it, I guess you don't care. But I guess if you actually do get to the $100 range, and how many did he buy? About 30. Okay, let's go. 30. Can I answer 30 here? Let's go. Alright. So if it does reach 30, oh, I guess it costs you 12 grand and you can make 535. How much do you think Uber's gonna make? What's Uber's Uber's target price 2026? Let's see. It's projected to be between. Oh man, I cannot recommend some of his. This is too much. But anyways, let's listen to what he's got to say.
Airbnb, this is a sad play, but it was up 100%. We made about 40 grand on this play, never locked it in. Now it's down 10. So I would rather load up, get to a higher position size, than chase a market.
Wait, so he says he was up. He was up 8 grand, I guess. Oh yeah, it's down because I guess he counted his profits to his losses because he didn't lock them in.
Honestly, so I'm not very sad that the market is giving me discounts because the whole goal of the Leap episode.
All right, now I'm kind of understanding what he's trying to do. He just buys them for a long, but he's gonna sell them for cheaper. So I guess if Uber right now it's at 75, if it goes up to somewhere close to 100, he'll sell it in September for double your money. Okay, I can see that. He's trying to look for, because whereas if you have 12 grand and you buy it in the money instead, you won't be able to buy that many. How many can you buy? Like 3? No, you buy 10. Okay. If you got 10 and it does reach the 100, if you reach the 100, you still. Oh no, man. I would rather buy it in the money instead. Because even if it does go up to about the 100, you make pretty much almost about the same. Not gonna lie. Rather buy it in the money than out of the money.
Was to pile in every single month, more and more leaps, buy 5K a piece. So now let's go over the 7-day highlights of what happened, all the trades I took in the past 7 days. I mean, it's been just bam, 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 perfect execution. I don't know how it's happening, but basically we had 2 swing trades, 1 day trade on TSLL, which is the Tesla 2X fund that rose 10% in a single day. So the whole idea behind the markets, what I've been telling all the students is to go to cash, be more selective, and wait for the bottom. What do we do while we're in cash? If you have the opportunity to day trade,
if you have a 700 plus credit score,
So far, not too bad. I would say
right now,
don't like how out of the money his leaps are.
the day trading opportunities are insanely profitable for the risk to reward that's being out there. And I'll show you why, I decided to take that intraday 0-day option trade for $90,000 profit. But honestly, I would never take a 0-day option trade with just 60K except this market. You want to trade corrections. Corrections are just the most profitable time to be in and out. Things are moving 10%.
Corrections are the best time to go in and out. Yeah, I'm not gonna disagree with that statement. It is really good to buy during corrections. If it's a correction, what happens if there's actually a crash? Because we have no guarantee that the market is. It didn't price out all the uncertainty, if that makes sense. We still have lots of uncertainty.
Per hour sometimes. On top of that, the highlights with the Leap portfolio is we scaled out a route for 50% gain, and we just bought the triple Q I guess they're not leaps, but they're calls for July. So those are the July 31st calls. So in terms of the proof, you can watch the Thursday video, but it's a $89,000 profit on triple Q for puts for 0 day. And you'll never see me put another 0 day trade on for another like 2 to 6 months.
Dang, he made cool. So is it? He'll open, one, see puts, weeklies.
In terms of TSLL, I told you guys I was buying TSLL. I honestly thought the bottom was in last week for TSLL.
TSLL. Everyone deploying a third of cash to TSL today. If you want to take advantage, you can sell at the money. June puts TSL over 10% pre-market here, depending on where you enter. So this is the third, which was 17 days ago, or several, 18, 20.
TSLL, boy was I wrong, we're down another 20%. But the whole idea of what I'm trying to do with my capital is get a 1 day swing for 10%, or an intraday swing, or an intraday hold for 10%. And that's kind of what TSLL is providing, is a lot of 10%ers, where you can make 10% shorting it, buying it. And that's what we did with the students. We got 10% holding overnight from Friday to Monday, and we actually were able to exit pre-market. So out pre-market, don't even need to hold till the market open. It's great. And then TSLL, we bought again on, I think, Tuesday or Wednesday, and made another 10% intraday. So when I say last week I was buying TSLL, I was really just trying to hit the 10%. What I didn't know is most of these trades I'm giving on these YouTube videos are moving too quick. They're moving by the time the market opens the next day. So I'm hoping to try to slow it down, hoping to give you this triple Q setup and truly help you understand what's about to happen. So let's hop on here, throw up the charts, give you the overview, and give you the game plan. So triple Qs formed a beautiful hammer. And this hammer candle is very, very, very likely to give us a bounce on Monday, Tuesday, Wednesday. So what I'm looking for is just a small retracement to 510, and then evaluate from there if I still want to hold the trade. That would be a 50% profit with those July contracts. And at the end of the video, I'm going to go through.
I was hoping for the dead cat bounce or pretty much a retracement to 510. Alright, you buy it here at 490 and sell it at 510. Let's look at how that looks. Okay. So option strat again. Q, right? Oh, Q. Alright, the 480. So let's see. We bought the July 500s, right? So you bought like 88,000 of those? How many would that be? That would be like 70. No. I think went over probably like 50. Alright, let's do 40. Alright, so he bought 40 of those, and he's hoping that that the small bounce, 85,000, ooh, doubles money. If he gets to 510, he'll lose his money. Let's do a shorter range, you can see. So he's looking for it to get to about 510. So yeah, he's trying to look for a quick double up. Not too bad. But why not? I don't want to be too big of a hater. Why not just buy 480? And just do 25 contracts. 510. I guess it doesn't give you as many. Alright, I guess this, he doesn't want to know what he's doing with how to maximize his money.
Through a whole tutorial on how to sell calls properly. It's probably the one comment I get across the board is, Matt, how do I sell covered calls? And with the Leap portfolio, if you want to generate income, at the end of the video, I'll show you how to do that. And using the triple Q calls, I can give you some examples. So triple Q hit 10%, and that is where most corrections are done. So there's a chance, like when we hit my target this morning at 482, that was the beginning of my buy zone. I just want to see 482 hit, there's a chance that that was the most this correction is going to come down. So once I hit that last key level I needed to see, which is the 480 zone, 480, 42, I didn't want to wait till Monday, Tuesday. So I bought in, it ripped 10 points, we're up 15%, and I might have got lucky.
Or he bought at 480. Okay. I don't disagree with him. He knows a good buy zone, so he didn't buy at 490 as I thought. He bought it at the 480. Alright, so far so good.
But the point is, you have to understand corrections don't go much further than 10%, and they don't last longer than 20 to 30 days.
Corrections can go up. So one thing I have to say, they can go up to 14. Yeah, I'd say a correction go up to almost 18 or 19 before consider a crash, right? I think you'd say 17%, 16, 7. So it can go another 7%. So if this is a correction, we could still see more until they consider it a crash.
Days. So the chance of us continuing to sell off is getting smaller and smaller because this correction at this point has lasted 17 days. 17 days. Depending on which candle you look at, it might be like even 20. So this correction is getting close to the very end. And
we're now at 25 days into our correction, I believe, which is 4.5 weeks or maybe even 5 weeks.
Once the correction's over, the rip to the high is unbelievable. I mean, this sell-off in August, once we hit the bottom and consolidated like for 3 candles, we annihilated the whole sell-off move in 2 weeks. And then from there, we made a double bottom, market rallied for months, the easiest market ever. But this sell-off here, like you'd be surprised how much we could climb on a dead cat bounce or a true bottom. So I think I don't want to miss that. I'm ready for it. But you have to understand the structure of a correction to truly trade it correctly. So hopefully understand the time length is almost being hit and the maximum move is pretty much being hit. The only thing you're worried about in a correction, which I'll warn you, is the 20% corrections. The 20% corrections involve the worst of the worst conditions kind of showing up. So this correction here was 23%. This took 84 days.
So we could be right there too. So I guess I'm gonna be fair with him. He's actually worrying about an actual crash. So yeah, it's difference between a correction and crash. So a correction is a drop of 10%, but less than 20, like I said. A massive loss is typically a decline 20% or more. So that's okay. So that was a crash. This could be. This is so far definitely a correction. At least it could get to a crash for all we know.
Type of stuff you can't plan for. Like you could probably see it coming, but you really can't adjust and adapt as easily in that correction. And what pushes this to 20% versus 10 is the bonds.
So I guess, well, this is the Trump's first. It actually did drop just like, and it rocketed up in April, and it crashed again it crashed again really fast. Are we gonna see the same thing that happened during Trump's first term?
Increasing. So October 18th is a very special day in the markets. If you go to the Fed funds, we'll throw that up. And that is when the Fed started raising rates for really no reason. So October, where is it? Yeah, October 18th. The Fed was just raising rates for about a full year. And
why were they raising rates in 2018? I don't remember why, but that's pretty silly of them.
This was rocketing the bond yields at that time. And when the bond yields are rocketing, the market really struggles. And you can see this chart here. This is the 10-year bond. We rose from 1% to 3%. It's not something like you would think would be an obvious investment decision, like, oh, a 3% bond versus, Tesla. But when these bonds move quickly, the algorithms start following each other. So if all the algorithms start buying bonds, it creates this bond frenzy. And this typically the algorithms get tipped when there's a lot of momentum. So again, that October drop in the markets was really due to just the bonds ripping. And then from there, finally, the bonds went back down. Trump bullied the Fed to lower rates, which I think is a similar situation that's going to happen now. He's going to bully the Fed. So in terms of the triple Q play, I want to give you an overview of why, we might not hit a 20% correction, why this might have been the bottom, and why I started to buy a little bit. So I still have a little bit more to buy if it drops, but for now, we hit some of the buy box and we're in. What I believe will happen is the market there's a chance it hits a portion of this retracement, makes a second bottom, and then you get this insane run past the highs. This is where your leap options, your September options are going to print is really this confirmed bottom. Any type of correction in the market typically needs to have a double bottom scenario. And that's where you buy and hold, because that's where all the money's made in the move. At this point of the correction, this is a tradable bounce where we're looking to take profit close to the highs, close to even like the 70% retracement, and then be done, wait for that second sell-off. And that second sell-off is where you go heavy. So right now, I'm thinking this should last 15, 30 days, possibly getting up to here. And then from there, we want to sell, get back in. That's the game plan. I'm not sure it plays out exactly like this. There's a scenario where this isn't the bottom and it has to push to 470. And then from there, it looks something like this. And this is where you're not nervous for this because, again, cheaper entries just mean more to the upside. So if we run from here to the upside, it's 150% return with the July options. If we run from here to the upside, it's probably like 250. So you kind of want this dip extra next week because that is the highest likelihood bottom, in my opinion, and then the best risk to reward. You're going to get more. And then we're just trying to sell at all-time highs, buy that dip after. Now I want to show you the secret to covered calls.
Yeah, this guy, I do kind of like his strategy. It's very aggressive, but I guess this is how he makes a lot of his money. This guy, dude, very risky though.
I just want to give you one solid trade this week, nothing more. I want to go over next the portfolio, the covered call aspect, because the covered calls, you can take advantage of the real passive premium, or you can decide to maximize the leaps or the long calls. It's tough to know what your goals are if you don't lay them out on the table. So I'm going to go through the first person that is low risk, that's buying leaps and wants to be safe. First person buying leaps will cover at the money and go 15, 30 days. So let's say we bought the 500 calls. Unfortunately, selling under your strike means you're going to have a margin requirement. But if you were to sell covered calls here, let's say 10 days out, 490, you could bring in 15 grand. And this is interesting because the position I just added was like 38 grand. So that's like a 50% return. And this is like a calendar spread. So covering at the money, probably the most aggressive cover, but will protect you the most, will give you the most passive income. Because theoretically, or let's say 490, 492, theoretically the 492 options are out of the money, so they're worthless. So this is really $13,000 that should evaporate. So we look at this as the defensive option selling. That's play one. That's how you make 30% return in 2 weeks or even 10 days, which is, it's nuts. How do you make more than whatever this is, 13 grand? Again, we're in the July options, we're in the 500s. If we hit the 520 mark, which is very possible in 30 days, you can make 28K. But if you start selling calls at the money, you can't make anything. You're always limited to only making the covered call premium.
Oh, sorry, just
so if you want,
yeah, I thought you were going to bed.
Okay, thanks.
To truly maximize what could happen with this bounce, you let the markets run to 520, and in that case, you sell calls at the money there. So that's called maybe call it like a wait and cover. So if you wait and cover the position, you make your that what was that earlier, like that 16K or 13K, you make 13K plus 28. So you've taken your returns up like tripled them. So 28K is your running potential, 13K is like your 10-day premium collection. And the other thing to do is to line up your covered calls to where you want to exit. So for me, let's say I wanted the market to hit 520. I could write covered calls at 520. The only issue is you don't collect any money. And if we hit 520 and we go past it, you've limited your upside for just a fraction of the money. So I don't like selling covered calls out of the money. I don't like doing that at all. $600 compared to 13,000, like being able to sell an aggressive covered call, like there's no comparison. So I think the best.
Dude, this guy sells aggressive covered calls too. This guy swings for the fences, so this guy takes a lot of risk.
Plan is either you're defensive and you're nervous and you want to learn this strategy of passive income, just cover right away at the money 10 days out. You'll probably be hitting 10K a week. The other scenario is you do like a bump and run. You just let it run, then you cover it. That's where you're getting the collection of this. So do you want to have a, let's say 40, you want to have a 40K 10-day stretch, or do you want to have a 13K 10-day stretch? Over a month, this might start looking like a 60K play. If we start to cover twice, we were able to do 2 of those covered call scenarios. Obviously, I'm not taking into effect time decay, but those are the best ways to understand covered calls that I can think of. So if you want to buy the leaps with me, just understand those are the 2 ways to manage it. And fill out an application with
Ultimate stock crash course. This guy takes a lot of risk. Sells in the money covered calls. That takes a lot of collateral. Whew, man, I kind of like his style. I gotta say, I recommend anyone who watches it to only take this type of risk if you really understand the options and you have a lot of money to actually try. But I highly do not risk because he is buying out of the money leaps and he's selling in the. So he's selling what I don't know how to say that. Your leaps are 500, and he's selling his calls at 490. So you are essentially, I guess I don't know how else to explain it, but if it rips past and up and over, your leaps are pretty much negated by the loss of how much you're in the money. Sell calls. When you sell cover calls, you may end up losing all your collateral money that you had to put up front, because what he said, he called it margin call. It's called collateral money. You have to put up money up front if you're gonna sell your cover calls in the money. But anyways, not this guy's got some clever ideas and everything. And he does say, like I said, I think that the dollar cost average of buying in is definitely stolen from this guy, Matt Giannino, that Investment Corey has stolen from. So this guy, I'm gonna say he has original ideas. I kind of like them. They're very aggressive. So just to let you know, if you have a lot of money already, making 13 grand a month is pretty good selling in the money calls against your cover calls. That's a pretty good idea if I guess your QQQ leaps stay below 490. Other than that, no no real actual major complaints so far. He's just extremely risky in my opinion. And yeah, if you like my review, please give me a subscribe, leave a comment, and yeah, watch more videos and let me know what you like about my videos or if anything I can improve. Alright, have a good one.